This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, it's Joe. Hope you had a good long weekend. And today I would like to talk about price structure and the 1, 2, 3 sequence. One of the things that I have said when I'm doing one-on-one coaching, as well as some of my earlier videos and in the book, is that you want to be able to strip everything off the chart and be able to identify shifts in trend using the 1, 2, 3 pattern that I talk about in my book. And you want to start there, and then after you have written down where you see the changes in trend, overlay the moving averages, and then you can overlay the MACD and the ADX as well. And then you can incorporate those. I'd rather you understand price structure by itself and this change of trend pattern. You want to know what is a trend, where the changes in trend are taking place first. And if you can incorporate that and see that before you even look at anything else, I think it's going to give you a pretty big edge. So let's go ahead and get into the examples today. I'm going to start out with Adobe. I've got the daily chart of Adobe up, and I've already marked it up because I wanted you to be able to see these shifts. And what I'd like you to do is actually go to a chart, find a couple stocks, preferably ones that do have some activity on them, fairly active, some trends in place, and changes in trend. And you probably see more on the daily chart than you will on the weekly, but it's probably good to do it on both. And I want you to start drawing in these trend lines and start marking them up. So I'm just going to start here. This is the trend line break. You broke the trend line and then rallied back and tested the trend line. And the retracement here was between a 382 and a 50% retracement, almost reached a 50% retracement. Now, for me, the minimum retracement is this 382, about a third. I would qualify as a test. Okay, because sometimes, and the whole reason why I wanted to do this, I wanted to give you a bunch of different looks. I want to show you, I'm going to go through some of these in detail, and I want to show you how sometimes you go all the way up and test the high and even exceed it. And other times you only get a third of a retracement or a 38% retracement before you head back down. But that would be the 2 for me in this situation, and then taking out this low would be the 3. Now, if you notice what happened right after, we had a trend line in place and we broke the trend line. So this trend was confirmed on this bar, and then it had 2 more bars, and then it started this sequence going the other way. And we broke the trend line and then rallied up a little bit more and then came back and tested. This is more of a, the type of test that you would expect, a slightly higher low. And then we go up and take out this level up here, which is this prior high, and that's your 3. And now you have a trend to the upside. Now, the way this played out is it just dropped and broke the trend line here, and then again had from this low up to this peak was about, let's just test it. I would say it's somewhere between the 382 and a 50% retracement. Got very close to the 50% retracement again. Okay, so that qualifies as a 2. And then when we come back down through this low, now we are in a downtrend for 1, 2, 3, 4, 5 days, 6 days, 7, and then we break the trend line going the other way. You break the trend line, and then you come back and test, and then you take out the high here, and now we have a trend line going up to the upside. We break that trend, rally back up and test, nice lower high, and then come back down through this low, and now we're down to the downside. And then we break the trend line again, come back and test, and then move back to the upside. Now, this is a much more aggressive, decline. And when you throw the moving averages up, you'll see that this is a more standard look where you break the trend line, you come back and test this way and come back up. This is the failure setup. This is the sell signal that fails with the moving averages. This is giving you a little bit of a heads up by looking at just the price action. You're getting a little bit of a heads up ahead of the moving average environment. I prefer to use this change in trend that works in conjunction with the moving averages. But it's good to be aware of what's going on here. So then we've been in an uptrend ever since in this stock. So once you break that trend, especially on this here, we've made new highs. Even if you broke the trend line, you've never come back and tested and then reverse back down. So the trend is up, and you draw in. So the key thing here is you want to use the last bottom, last real bottom as your anchor point for the trend line. So if I'm going to do that, the way I'm drawing the trend line right now, I'm coming through this low and up through this high. The key thing is coming up through this low. And then you don't want to pass through prices. So I have to come all the way down here, because if I drew the trend line from here, I'd have to pass through these prices. And I mean, you can do it this way if you want. I would just prefer to go back as far as I can where I'm not passing through prices, use the lowest point, and then go from here. And this will move up. And then if you make another a higher low and go to a higher high, then you can change the slope of the trend line by using the latest anchor point. So that's kind of the key to that. Let's go ahead and look at another stock. So this is Lululemon. So we can see starting at the left side, we were moving up and it had some pretty wild swings here, but this was really the trend line that you could use. I think that was a legitimate trend line. It broke this trend, even though it didn't really break it by a lot. It was below it for 2 or 3 days, then rallied up and tested more than a 50% retracement. This was more like a 62% retracement, then came back down through the 3 here. Now, one thing I want to mention to you is that I don't really wait for the 3 in most cases. I'm usually looking here. When I get a break of a trend line and then a test of this high, I'm going down to the smaller time frame because I don't really want to wait for this to go all the way from 370 all the way down to 345 or something like that to take out the 3. So I'm usually going to go here and then I'll go down to a smaller time frame to get a better entry. So I just wanted to make that point. And then if we go, we're in a downtrend, and then we turn the trend here, break the trend line, rally up a little bit more, and then get a good test of the low. It's about a 50% retracement. And then we work sideways and then we take out this high. So now we're in an uptrend. We make a higher bottom. We've got a trend line in place. It's broken, rallies back up. This is probably only about a 38% retracement. That then we come back down through this low, and that's the 3. But notice, one day later, we basically make the bottom, and then it starts the process going back the other way where we break the trend line, come back and test, and then work your way back up. Now, if you notice what's happening now, we have the 1 and 2 in place, and notice how when this went to when this went back to test, it actually went to a marginal new high. So the number 2 in the change in trend is the one that you have to be a little bit flexible with. It's not going to be perfect. It's not going to give you the same look every time. And that's why I think a lot of people get confused when they're doing this. But you need to go through and look at this and do this exercise. Do this with about 3 stocks. See if you can find 5 changes in trend on a daily chart going back, and just keep doing this and get better and better at seeing this without any help from moving averages or MACD or ADX. And then when you throw those on here, you're going to be amazed at what a difference it is. Now, we've broken the trend line and we've tested. Now, again, when we get back up to this peak like that, you could check the MACD, you could look at the ADX and see what kind of momentum conditions are in place. You know you've broken the trend line and now you've tested. You make a marginal new high, which is basically a failed new high, and then on the reversal back down, I could be down on an hourly chart looking to trade this from this peak down to this test. And then if we break the 3, then odds are pretty high that now we're in a downtrend on the daily chart, at least for a period. You do want to look at prior lows as being kind of support areas, but just these are the types of things you want to be doing, looking at price by itself. Let's look at last one is GM. So I'm going to switch this to a weekly chart. So the point I wanted to make here is, if you started here and you drew your trend line in place, this is how you'd be reading this. You'd say, okay, I've got a trend line here and it just got broken and now I'm waiting for the 2. That's not how I do this. This is crucial. Because I'm using the last swing low, last higher low as my anchor point, and in this case, it would have been this low. That was my anchor. I'm going to go back in time, and I don't want to cross through prices. So if I go all the way down to this low, I can't do it. So let's just do this. So if that's the anchor point right here, and I draw on a trend line from the bottom, I'd be crossing through all of these different all this price action would be being crossed through. Can't do it. So the closest low I can use is right here, and it doesn't pass through prices. Now, if you notice, we come in, we tested it again, broke the trend line, and then rallied back up, made a marginal new high, and then reversed. So again, if I'm being aggressive here, I'm looking at momentum up here. I already know I've broken the trend line, and I've rallied back up. This is the 2 in the change in trend. 3 is way down here. I'd rather be down on a lower time frame on the daily chart looking for a trade. If I want to play more aggressively, then I'm looking for a trade from here down to here. And then if it does break, then it turns into a really big winner. I want you to start thinking this way. Use the price action by itself as a way of giving you a little bit of an early edge, and it's going to increase your confidence with what you're seeing on the moving average environment. So a lot of times this will be in conjunction with a 40 to 18 bounce, or it'll be like a failure pattern. This might have been the first time it was inside the zone and then rallied up and failed and then rotated back down. Those are the types of things I want you to be on the lookout for. So anyway, I thought this was a good exercise. I do want you to go through, pick out some stocks, run through this exercise, do it on a daily, do it on a weekly, and let me know if you have any comments or questions. All right, see you next time.